So let's talk about Franco-Nevada. This is a giant in the gold world that, get this, doesn't actually own a single mine. It's a company posting some of the most unbelievable profit margins you will ever see, while at the same time dealing with a billion-dollar catastrophe. Let's dig in.
Okay, so let's just kick things off with a question that really gets to the core of this company's whole deal. What if you could get all the upside of soaring gold prices, but without the crazy costs, the operational nightmares, and all the risks that come with actually running a mine? I mean, it sounds almost too good to be true, right? But that's the fundamental idea behind the business model we're about to unpack.
On the one hand, you've got traditional mining. It is just incredibly capital intensive. You're constantly pouring money into labor, fuel, equipment, and if something goes wrong, a flood, a strike, you name it, that is your problem. But then, on the other hand, you have this royalty and streaming model. We're talking zero operating costs, you're spread across hundreds of different assets, and, this is the best part, when costs for the actual miners go up, your profit margins can actually get better.
So, what exactly is a royalty? Well, the easiest way to think about it is like being a landlord for a gold mine. You give the miners some cash up front to help them get started, and in return, you get a check for a percentage of everything they sell for the entire life of that mine. And here's the kicker. You collect the rent, but you never, ever have to fix the plumbing or pay the bills.
A stream is a little different, but man, it is just as powerful. With a stream, you give a miner a big upfront payment. In exchange, you get the right to buy a slice of their future gold production at a fixed, super low price. Say, for example, just 20% of whatever the market price is. This is how they lock in these massive, massive profits, especially when gold prices are going through the roof.
So how does this model actually build an empire? Well, sitting at the very top of this industry is Franco-Nevada. And what's absolutely incredible is that their multi-billion-dollar global portfolio is managed by this tiny, hyper-efficient team of just around 40 people. That's it. A small group of geologists, lawyers, and finance whizzes runs a global powerhouse with a level of efficiency a traditional mining company could only dream of.
So what does that empire actually look like? Well, it looks like this one number, 430 plus. That is the core of their entire strategy, massive diversification. We're not talking about betting on just 2 or 3 mines here. We're talking about having a piece of over 430 assets, spread across different commodities, different countries, and different mining companies. This is their #1 defense against risk.
Okay, so how do they really stack up against the other big names in the space? Well, if you look at the numbers, Franco-Nevada is the biggest player by market cap for sure, but what really makes them stand out is that asset count. I mean, their peers like Wheaton and Royal Gold are absolute giants, but FNV's portfolio of over 430 assets, that gives them a level of diversification that really is in a league of its own.
And yeah, they call themselves a gold company. And at 70% of revenue, gold is clearly the main event. But they are also really smart about diversifying. See that 14% slice from oil and gas? That provides a super valuable source of cash flow that isn't tied to the price of gold, which really helps smooth things out over time.
But this is where the story gets really compelling, especially if you're an investor. Over the last year or so, Franco-Nevada has been living this paradox. It's a tale of the absolute best of times, happening at the exact same moment as the absolute worst of times.
First, the good news. I mean, the really good news. There's been this massive macroeconomic tailwind. Gold prices have just absolutely rocketed, going from an average of under $2,000 an ounce back in 2023 to nearly $2,900 in early 2025. For a business model like Franco-Nevada's, that is pure rocket fuel.
And how does that rocket fuel translate to the bottom line? Well, you got to see this number to believe it. In the second quarter of 2025, Franco-Nevada posted an adjusted EBITDA margin of 99%. No, that is not a typo, 99%. It literally means that for every single dollar of revenue that came in the door, 99 cents was almost pure profit. It's just a stunning display of this model's power when gold prices are high.
But, and this is a huge but, as investors were popping the champagne over these incredible margins, a closer look back at the full-year numbers for 2023 showed something deeply, deeply troubling. A massive billion-dollar hole had just been blown in their balance sheet.
And that hole has a name, Cobre Panama. We have to unpack this crisis, because right now it is the central issue defining the entire investment case for Franco-Nevada. This one single asset represents both the company's biggest headache and, just maybe, its greatest opportunity.
I mean, the collapse happened with just shocking speed. In late 2023, what started as some public protests against the mines contract just exploded. The country's Supreme Court stepped in and declared the contract unconstitutional, and then, within weeks, the government ordered this massive, world-class mine to just stop. All operations halted. It went from a cash cow to zero, basically overnight.
So what was the financial fallout? Well, it was this number, a non-cash impairment charge of $1.17 billion. Basically, the company had to tell the market, look, for accounting purposes, we have to assume this incredible asset is now worth nothing. Just a brutal, brutal hit for what was supposed to be a cornerstone of their portfolio.
But the story isn't over, not by a long shot. Franco-Nevada is fighting back through international arbitration, there's a new government in Panama that seems open to talking, and this mine represents up to 5% of the entire country's GDP. The economic pressure to find a solution is immense. So here's the crucial point for an investor. The stock market is pricing this asset as if it's worth zero, but the actual odds of it staying at zero forever are clearly not 100%.
So all of this brings us right here, to the crossroads for any potential investor. You've got this best-in-class company enjoying record profits from its main business, but it has this huge question mark hanging over a key asset. Let's really weigh the two sides of the argument.
Okay, the bull case is pretty compelling, right? You're buying a superior business model with a debt-free balance sheet at a time when gold prices are booming. Plus, you get the whole Cobre Panama situation as basically a free call option. Any good news from there is pure upside. The bear case, though, is that the Panama uncertainty is just going to hang over the stock. Gold prices could fall from these record highs, and the company still has a lot of exposure to political risk in Latin America. You know, through all this turmoil, management's philosophy really comes down to this quote here. And they don't just say it, they back it up. They've increased their dividend for 18 consecutive years. Announcing another dividend hike after the Panama shutdown, that was a powerful statement about their confidence in the strength of their diversified business.
And so we end right here. This is the question that every investor looking at Franco-Nevada has to answer for themselves. Is the company's biggest problem actually its biggest opportunity, an asymmetric bet that has already been fully de-risked by the market, or is it a fundamental roadblock that's going to cap the company's potential for years to come? That is the billion-dollar question.